Good evening, ladies and gentlemen. Today we are having another knowledge sharing session of the CMA Sri Lanka CPD program organized by the CMA Sri Lanka on the topic of the state of Sri Lankan economy, developments, policies, and outlook, as reflected in the annual review 2023 of the Central Bank of Sri Lanka. The presentation will be delivered by Dr. Sujeetha Jegajeevan, Director of the Economic Research Department of the Central Bank of Sri Lanka. In order to start today's proceedings, I have pleasure in welcoming Professor Lakshmana Vattavala, founder and president of the CMA Sri Lanka. Over to you, sir.
Thank you very much, Mr. Gajendra. Our keynote speaker today, Dr. Sujeetha Jegajeevan, our council member, Mr. Gajendra, our CEO, Mr. Kosala Disanayaka, the senior director, Ms. Shanti, members who are participating at this webinar, and other invitees and guests. Today is a very important day where we are going to listen to a very important topic of the state of the Sri Lankan economy, developments, policies, and outlook. And of course, this is from the Central Bank of Sri Lanka Annual Economic Review 2023. So you would be pleased that the current director of the Economic Research Department, Central Bank of Sri Lanka, Dr. Sujeetha Jegajeevan, will be making this address. Most of you may not be aware that she is a member of CMA Sri Lanka. So first of all, let me congratulate Dr. Sujeetha, and also we are very proud that we are having a member of CMA Sri Lanka as the Director Economic Research of the most important Central Bank of Sri Lanka. So I'm sure all members who are present and all other participants would like to see the how CMA has helped in the economic development of Sri Lanka. Just to say a few words about the Sri Lankan economy, you know that I'm sure Dr. Sujeetha will explain the improvements that have taken place. Most probably in the newspapers, you would have seen that the reserves have gone up to exceeding US dollars 5 billion. So that's a great figure. Then also the inflation rate has gone down, come down. Then the exchange rate stability. Now, this is something that has happened because before the devaluation, we were at 200, it went to 370. Now it has come down to almost close to 300 or below that. Of course, there are problems resulting in this. One, of course, is the exporters who are saying that they are being affected, but certainly we now have to see how we can have a stable exchange rate, and we have to work in order that we can increase our exports. That's the most important thing. Then on the debt side, I'm sure that Dr. Sujeetha will explain that. So a few words about CMA. Now, CMA, now we've done our new syllabus with the theme of equipping future accountants. And if you see that the three main areas that we are focusing is on the digitally enabled, value-driven, and solution-savvy. So you can see that we've now gone on to the latest things of data analytics and digital business, and also sustainability, which we have now taken in, which is very important in the syllabus. Of course, the ethics and governance, which we have further expanded because that has to be strengthened in any economy, in any business that is really there. So we are very happy that we've been able to do. In fact, yesterday, because we signed what's called a member pathway agreement with CPA Australia. Now, yesterday we had a webinar with them, and almost about 125 participants were there. So this shows that there is a great interest in the CMA qualification, which will add value to whatever that you are doing, whether you are after A level, whether you are in university, whether you are working in the corporate sector. The CMA qualification will add value to you. So we are very happy that you are all here for this important webinar, and that will be able to learn a lot of things from as to how your business organizations could improve as a result of what strategies have been done by the central bank. So thanks very much for all of you, and let me now hand over to Mr. Gajendra.
Thank you very much, sir. Next item on the agenda is the keynote speech, which will be delivered by Dr. Sujeetha Jegajeevan. Let me introduce her briefly. She is an associate member of our institute, the CMA Sri Lanka. She is presently holding the position of Director of Economic Research Development of Central Bank of Sri Lanka. She has completed her PhD in Economics at Queen Mary University of London, MSc in Economics at University of Essex, MBA at Rajaratnam University of Sri Lanka, and BBA Honours Degree at the University of Jaffna. Her research interests are in the areas of macroeconomic modeling, forecasting, and monetary policy. Over to you, Madam.
Thank you very much. Thank you for the kind introduction. And this is more like a back to school session for me because I have come back and giving a lecture at CMA. Actually, CMA was my second qualification after my first degree. I completed CMA in 2005, even with some subject prize. But I got the membership only in 2018, since I was busy with my master's and PhD. I couldn't get the membership. Now only I got the membership. So it's an honor actually for me to do a lecture at CMA. And I'm hopeful that I will give you, I will fulfill your expectations in my short presentation and Q&A. Can someone enable me to share the screen?
Yeah, fine. Okay, sir.
Can you see the screen now?
Yeah, it's still coming up. Still not come. Right. Yeah, fine.
Now we can see.
I will start my presentation. Today, I'm going to talk about the state of the Sri Lankan economy, mainly focusing on the developments, policies, and outlook based on the Annual Economic Review 2023 published by the Central Bank of Sri Lanka. If I can tell you that 2023 has been a remarkable year in many sense, and also for the central bank. The new Central Bank of Sri Lanka Act has been enacted in September 2023, which gave more independence to the central bank in its policy making, as well as greater accountability to the public and the parliament. And with these changes, there has been changes in the mandatory requirement and the reports that Central Bank is expected to publish as well. Earlier, under the Monetary Law Act, we were asked to publish an annual report, and there has been some specification about the content of the annual report. Now, under the new Act, the requirement for publications are different, and those are more aligned to the Central Bank's mandate. So according to Section 80 of the new Act, the Central Bank governor is expected to ensure that the Central Bank is publishing a report within 4 months of after completion of a financial year, and also to submit to the Parliament a report on the state of the economy during such financial year, emphasizing its policy objectives and the conditions of the financial system. In fulfilling this requirement, this annual economic review has been published in end of 24 April. And in addition to this publication, we also had another parallel publication, which includes the financial statements of the central bank, as well as a brief summary of operations of the central bank. Both of these publications are available in all 3 languages in our website under publications. Anybody who wants to get more details of these publications can visit our website and get more details. Since this structure of the report has changed, let me briefly discuss about the overall structure of this report. As in any other annual report, we have given a summarized version of key economic indicators of the economy as well as key social indicators. And the summary of the overall report has been given in the executive summary with key messages that we wanted to communicate to the public and the other stakeholders. And the main structure of the report has been divided into three major chapters. The first chapter is about the macroeconomic developments and conditions of the financial system. The second chapter is about the review of central bank policies. And third chapter is on the macroeconomic outlook for 2024. And also we have given a summary of key policy measures taken by the central bank or the policies related to the central bank during 2023. In addition to that, it is customary for us to give some on some topical areas as box articles, small box articles. In that manner, we have also published 7 box articles on selected topics. Also, we have some statistical tables and special appendix tables. There's a difference in what we have been publishing in annual report and this report. Usually, we have a very long list of statistical appendices, but we heard from many stakeholders and researchers and policy makers, think tanks, and all the difficulties in accessing data, especially when the data is presented in the PDF form. It's very difficult to download and use it for making charts, tables, and for analysis purposes. So we took some special effort this time to not only to give some PDF tables as a part of the publication, and also to give tables in the form of Excel in all 3 languages. First time, all 3 languages, the data is available. We have 142 appendix tables and 11 special appendix tables available on our website that also can be accessed through the publication website in Excel form. So anybody who wants data can easily download and use them for their purposes. So let me give a brief discussion of the first 2 chapters of the report. I will start with the summary of the first 2 chapters. The decisive policy adjustments and structural reforms implemented by the government and central bank during the crisis time as well as in 2023 has helped to restore macroeconomic stability to a greater extent. And this macroeconomic stability has been reflected in many fronts, especially on certain key important macroeconomic indicators, mainly the inflation. In 2022, inflation has been the biggest economic problem, and that has been controlled through, and the inflation has undergone a rapid disinflation path. And the second other problem in 2022 was the fluctuated and depreciated exchange rate that also got stabilized during 2023. And it is important for any country to have buffers for external, to withstand external shocks, because now it's hard to find a closed economy that is not connected to the world. So more or less all countries are open economies, so they have to trade and engage with other countries. So it is essential for the country to have some external buffers in the form of tradable currency. So that is measured by the size of the gross official reserves. There has been a notable improvement in the gross official reserves build-up as well. And also the financial sector. So during the crisis time, there were a lot of fears and rumors about this bank is going to collapse, that company is going to collapse. But even though there was a lot of challenges and risks to the financial sector, the financial system stability has been maintained, and it could withstand amidst several crises due to high level of crisis preparedness adopted by the policymakers as well as the industry participants. And on the fiscal side also, there has been a notable performance in 2023. And with these all key sectors stability being restored, we could see some improvement in the growth front as well. The economy has started transitioning towards the growth path towards the latter part of 2023. And in the upcoming slides, I will be discussing these factors in a bit more detail. Let me start with the inflation, which is the mandate of the central bank. Inflation that reached to the historically highest level by September 2022 to around 70% has recorded a rapid disinflation path, and now this has reached to lower single digit level. By April, the inflation headline inflation based on Colombo Consumer Price Index has reached 1.5%. And there were several factors that contributed to this disinflation path. Mainly, the policy measures taken by the central bank through ultra tight monetary policy conditions, and which was supported by the tight fiscal conditions adopted by fiscal measures adopted by the government as well. So in addition to that, there were other supporting factors like normalization of domestic supply conditions with the availability of forex, easing of import restrictions, and easing of energy-related constraints, and easing of the supply of essential items, and also the moderation in global commodity prices, especially the fuel prices. And also the strengthening of Sri Lankan rupee with appreciation of the currency also has helped to restore the price stability. And going forward, under the new act, the central bank is targeting to achieve inflation at the targeted level of 5%. And central bank is committed to maintain inflation around the targeted level. So with this restoration of price stability towards the early part of 2023, the monetary policy stance was transition towards a accommodative monetary stance. From June 2023 onwards, central bank has started relaxing its policy interest rates. Policy interest rates are the key benchmark rates that determine other market interest rates. So we started relaxing the policy interest rates, and during 2023, the policy interest rates were reduced by 6.5 percentage points. In addition to that, in March 2024 as well, we have reduced the policy interest rate by 0.5%. So compared to the highest level of policy interest rate, now the policy interest rates are 7% lower. And this relaxation was possible due to the notable moderation in inflation and well-anchored inflation expectations, and also the concerns about subpar economic activities and subdued demand conditions in the economy, and also the easing of pressures on the external side. And in line with the relaxation in policy interest rates, as well as several administrative measures taken by the central bank to targeted at some high-level lending interest rates, and also reduction in risk premium associated with the government securities after the completion of domestic debt optimization also has helped to reduce the market interest rate to a notable lower levels compared to the peak levels recorded in 2022. There are some benchmark interest rates shown in these infographics. If I just pick one example, 91-day Treasury bill rate, which was at 32.6% by the end of 2022, that declined to 14.5% by end of 2023, and further to 10.1% by March. Now it is less than 10% level. And similar reduction has observed in key other lending and deposit rates as well. And we expect that there will be further reduction, especially in the lending interest rates going forward. And on the monetary front, we also observed that there has been some expansion in net credit to the government by the banking system. And also net foreign assets of the banking system increase. With this, the growth in broad money supply, M2B supply, remained at moderate level. So if you can see the main reasons for this, the money supply growth to be moderated is the reduction in the private sector credit and reduction in credit to the state-owned enterprises. One point I wanted to highlight here is in the chart on the right, you can see a darker line, the maroon color bars that shows the central bank's credit to the government. You can see we have shown a chart from 2014, and you can see that it has declined notably in 2023. That means that the central bank's monetary financing to the government has been controlled in 2023 with this enactment of the act, and the government moving to market sources for its credit. And the reduction in the credit to state-owned enterprises like SOEs is mainly because of certain loans of selected state-owned enterprises have been moved to the balance sheet of the government, so that there has been a reduction in the credit to the state-owned enterprises, but now that is reflected in the increase in net credit to the government by the banking system. And if I can talk about the growth developments, you could see that from 2022 first quarter, there has been a consecutive contraction for 6 quarters recorded in the economic activities. However, during the last 2 quarters of 2023, there has been a growth recorded. So with this growth being recorded, the overall growth of overall contraction of 2023 was controlled to 2.3%, which was comparable with 7.3% contraction recorded in 2022. So that shows that the economy is getting back to normalcy. So this recovery was underpinned by the renewed macroeconomic stability amidst softening interest rates and easing external sector pressures. And on the unemployment side, we could see that the unemployment rate remained broadly unchanged compared to the last year levels. However, both the unemployed population as well as the labor force declined during this year. And also we observed that there has been a high level of the departure for foreign employment. However, the size of the number of departures have been slightly lower than what was recorded in 2022. On the external sector, we could see a notable progress in many fronts. And on the left-hand side, you can see the current account balance shown, and which is one key indicator to show the health of external sector. You could see that there has been a surplus recorded in the current account balance in 2023, shown by a green color bar, and you could see that a similar green color bar was visible only in 1977. So after 1977, the economy managed to record a surplus only in 2023, which was mainly supported by lower trade deficit, supported by contracted imports, partly because of import restrictions and partly because of the reduced capacity of the people to demand imports due to these tighter monetary and fiscal conditions, and also improved earnings from tourism as well as workers' remittances. And on the gross official reserves also, you could see that compared to end of 2022, the gross official reserves have doubled to $4.4 billion by end of 2023. And reserve buildup is continuing in 2024 as well. By April, gross official reserves have been recorded at 5.4 billion. And of this, around 1.4 to 1.5 billion is due to the swap arrangement with the PBOC Bank. But even after excluding PBOC Bank's swap arrangement, the gross official reserves is above 4 billion, which is a healthier level compared to the levels we had from 2021 onwards. So the level recorded in April 2024 has been the highest level compared to the January 2021 level. So after around 3 years, the economy has managed to build the reserve to a sizable level. And of this, most of these gross official reserves are organic compared to other years, because this has been partly supported by central bank purchases of foreign currency from the domestic foreign exchange market. So it's healthy, and it's an organic buildup of reserves. Also, a part of the reserves also reflects the fundings we got from the IMF as well as World Bank and ADB, the remaining fundings in the gross official reserves coming from these funds. So with this improvement in external sector development as well as the outlook, the central bank and government gradually relaxed several exchange restrictions, capital flow management controls, and import restrictions during 2023. And if we can briefly talk about the trade performance, exports have declined by 9.1% to around $12 billion US, and imports have declined by 8.1% to around 16.8 billion. And the decline in export earning was mainly because of the reduction in the contraction in exports under the category of textiles and garments, that is reflecting the tighter monetary conditions and economic downturn in our export destinations, especially US and Europe. And you could see that the composition of exports as well, around 78% of the exports are coming from industrial goods, and 21.5% is from agricultural goods. On the import side also, you can see the decline on import expenditures are reflecting some of the restrictions prevailed during most part of 2023, and also subdued demand activities and tighter monetary and fiscal conditions affecting the demand capacity of the economy. And of the imports, you could see around 66% of the imports are going for intermediate goods, and 18% is for consumption goods, and around 16% for investment goods. And if you look at the middle chart that shows the direction of trade, it shows that we are generating trade surpluses mainly from US, UK, and Italy. And most of our import partners are India, China, and UAE. And this composition is broadly remaining. The top 3 countries for exports and imports are remaining broadly unchanged over several years. And the exchange rate development also has been favorable, and exchange rate stability has been minimized in 2023. You could see a very stable exchange rate movements during most part of 2023, and overall the rupee has appreciated by 12.1% in 2023 compared to 44% depreciation recorded in 2022. And under the new act, we are adopting inflation targeting framework, and that is complemented by flexible exchange rate regime. So currently the exchange rate movements are mainly reflecting the demand and supply conditions in the market. Central bank is not targeting any particular level of exchange rate at present, and will not be doing the same going forward as well. And with these changes and improvement in volatility, stability of exchange rate, several removals of restrictions on exchange transactions also happened during 2023. Let me briefly talk about the financial conditions. The total assets of the financial sector stood at 33 trillion rupees. Of this, 62% of the assets are represented by the banking sector, 12% by the EPF, 5% by the licensed finance company sector. If I briefly talk about the performance of the banking sector, There were some improvements in terms of liquidity ratios, capital adequacy ratios, as well as the profitability of the banking sector. However, some vulnerabilities were there due to the stage 3 loans as a percentage of total loan being high at 12.8%. And also there has been decline in the loans as well as deposit. And similar performance was observed in the licensed finance company sector as well. So during the year, several measures were taken to uphold the stability of the overall financial system, and also to give support to the financial consumers. Especially, there were some changes due to this the new act as well. Under the new Central Bank Act, the Central Bank has been recognized as the macroprudential authority of the country. And also this has been recognized as the resolution authority of financial institutions. So in addition, there were several directions issued to the banks about some discretionary payments, and also several microprudential measures introduced targeting the liquidity conditions of the bank. One of the important measures taken during last year was introduction of regulations on financial consumer protection for financial service providers, because usually we hear a lot of complaints coming from the customers of banks that they are not treated properly, there is some unfair treatment, so they were charged a high interest rate or maybe a lower interest rate for their deposits compared to the market averages, something like that. There are usually several complaints. We have a department to handle the financial consumers grievances, and we hear a lot of similar stories coming from the customers of the banks and other financial companies. And to make sure there is a fair conduct of finance business, this regulation has been issued. So there has been some rules set up in the conduct of finance business by the financial service providers. That is the comply, and the financial service providers are expected to comply with this regulation to ensure that financial consumers are protected from unfair, uncompetitive, non-competitive practices are adopted by the financial service providers. And let me briefly discuss about the fiscal performance as well. Of this fiscal performance, also there has been notable improvement reflecting the effect of the recent tax measures. We could see that government tax revenue as a percentage of GDP has improved from 8.2% in 2022 to 11% in 2023. And government expenditure, there were some rationalization measures. However, due to higher interest rate prevailed in the domestic market, the expenditure on interest increased. Because of that, total expenditure of the government as a percentage of GDP also increased. However, there has been a notable improvement in the key fiscal balance, which is called primary balance of the budget. The primary balance of the budget is a main indicator of sustainability of fiscal performance. So, which is the primary balance is arrived by reducing from the government revenue, reducing the interest component, so which is beyond the control of the government. So whether the government is generating adequate revenue to meet expenditures other than the interest payment. So if there is any surplus, that means that government is generating revenue at least to manage expenditures other than the interest. And if it is a deficit, that means the government is, the revenue is not adequate even to cover expenditures that are not interest payments. So you could see that there has been a surplus generated in 2023, which is 0.6% of the total of the GDP. So even the IMF expected a deficit, but there has been a overperformance in terms of fiscal performance. And you could see that this performance has been achieved after 2018, first time after 2018, which is after 6 years. And you could see that since 1950, there has been only 6 instances that government has generated surplus in the fiscal performance, which is a very good indicator. And we expect that this performance will continue with these fiscal consolidation measures currently being adopted by the government. On the debt side, the central government debt as a percentage of GDP declined compared to last year. Last year, it was 114.2% as a percentage of GDP. It has come down to around 104% in 2023, which is mainly because of a notable improvement in nominal GDP, as well as the appreciation of currency has helped to then foreign debt are converted to rupee, so that also has helped to improve the debt performance. However, due to high domestic interest payments, the debt servicing payment as a percentage of GDP has increased. Let me briefly talk about the outlook, what is going to happen in 2024. I will start with the inflation. From the inflation front, what we are expecting is there could be some intermittent fluctuation due to supply side factors, but we expect that inflation will be maintained at the targeted level of 5% over the medium term through appropriate policy measures. There can be upside risk to this projection and also downside risk to projection. The main upside risk to the projections are uncertain global environment that could affect the global food and energy prices that can be passed to the domestic prices. And also there are irregularities in weather patterns in the recent times. So any adverse weather conditions can affect the food supply. So that could increase the food inflation as well as the energy inflation that could feed into headline inflation. And also, so there could be upside revision to electricity prices in the upcoming period in case if we don't have adequate rainfall. And on the downside, so if the normalization of supply condition is delayed, there can be some downside pressure so that inflation can be lower than what we think. And also the diminishing purchasing power of the public also can affect the inflation trend. And we expect that the underlying inflation, which is the core inflation, will also be maintained around the as in line with the headline inflation. And also we are giving some projections based on some certain assumptions on the key indicators as well. We expect that real GDP will grow by 3%, and there will be a deterioration of trade balance. We expect that both imports and exports will increase. However, import increase will be higher than increase in exports. So the trade deficit will widen to 7.8% of GDP. And we expect that the surplus recorded in current account will continue in current year 2024 as well, but at a lower magnitude. And we expect the continuous build-up of gross official reserves. As a measure of month of imports, we expect around 3.4% of month of imports level of gross official reserves will be built up. And we expect the performance of fiscal sector also to continue with a surplus being generated in the budget, and also the budget deficit to decline to 7.3%. And also we expect annual average inflation to be 5% at the targeted level. So on the monetary sector, we think that the current accommodative policy stance could continue for a while if there are no major risks to our projections. And in line with already adjusted policy interest rate, we expect the market in interest rates, especially the lending rates, to come down even more in the upcoming months. And we expect that private sector credit will pick up in line with lowering interest rates. And also the net foreign assets of the banking sector will improve, and monetary growth will be around 15%. On the external sector, On the external sector, we expect the trade deficit to widen um, uh, with increased import demand and moderate export growth. And services sector surplus also to expect an increase, mainly with the revival of tourism and other services exports. And we expect primary income account, which reflects the interest payments, to widen with more interest being paid, and workers' remittances to continue the current momentum. And we expect market-driven exchange rate and increased reserves. And on the financial sector, we expect the resilience of the financial sector to continue with the recent strengthening of legal framework for financial sector, with the amendment to the banking sector and several other amendments happening to other acts of the bank financial sector. And we expect the structural, legal, and policy level reforms and innovations to be mobilized to help them stability. And let me conclude this presentation with some key takeaways from the presentation. We would like to stress few messages to the public and other stakeholders. Let me start with that. A formidable recovery of the Sri Lankan economy hinges on the continuity of the reforms. People have observed that there has been some stability, that is mainly because of the difficult policy measures taken and the reforms currently being initiated. And that should continue, especially the successful continuation of the IMF EFF program and completion of debt restructuring is essential. And since the country has not fully exited the crisis, there is no space available for any slippages from the committed path, including there cannot be any costly policy experiments. Building strong institutional setup and a legal framework will support the economic transitions towards new normal, while broader political and social consensus on economic reforms is critical to permanently resolve the structural imbalances and also to avoid recurring policy reversals and economic downturns. And these are essential for uplifting the welfare of the public through sustained growth. In this manner, the central bank is committed to maintain domestic price stability, external sector stability, and financial system stability, thereby supporting the sustainable economic stability and sustainable economic growth. Thank you.
Thank you, Madam, for your valuable presentation. Professor, we are taking the question and answer session or how?
Yeah, we will go to Q&A. So I don't see any questions that have come up as yet. But can I ask, first of all, let me thank Dr. Sujeetha for that excellent presentation. One area that now the IMF policies is about the cost recovery. How does the central bank maybe work on this? Because on the cost recovery pricing, could that also have an impact on your, say, on the interest rates and the other areas that are being considered, interest and the inflation rates on this cost recovery pricing?
So this cost recovery pricing is mainly for SOBs, state-owned business enterprises. So that is to ensure that the state-owned enterprises are not relying on the government for their budgetary financing. So what happens is, if these state-owned business enterprises are not generating adequate profits, or if they are not meeting their cost, then they will be generating loss. So what will happen is, then towards the end of the year, there should be a budgetary transfer. So that will affect the fiscal performance, because the government is given government has agreed with the IMF for certain targets for fiscal performance, the target on revenue as well as target on budget deficit. So if these business operations are not functioning properly, then that will affect these target achievements. So that will affect the continuity of the program. So that is the purpose. So these business enterprises, what we have observed is the most important ones are in the energy sector. So it's mainly CEB and CPC. So if they are not making adequate profit, if they are at least not meeting their cost, then the government has to transfer money. So that will affect the target. So to ensure that they are expecting the cost recovery pricing, and which is not applicable to the central bank because we are not coming under as a part of the SOE, and there is no budgetary allocation coming from the government to the central bank.
If I can just make a comment on this cost recovery pricing, because actually, of course, what the IMF says is that they should not run at a loss and they should recover. But the thing is, they have not really maybe related this to the productivity, because what we now find is all the inefficiencies and maybe other wastages and maybe various other things uh, will add on to the cost, which will really come on to the society. I don't know whether you all may have really done any work on that, or whether you all are taking any action, because otherwise we find that the inefficiencies of the state corporations are passed on to the consumer.
Yes, sir. So to be clear, so central bank doesn't have any role in this process. It's actually the government and the SOBs. Yes, there are some concerns whether all these inefficiencies are passed on to the consumers. So there are in the IMF program also there are some efforts to see the growth enhancing measures. There are this productivity improvement and all these are covered. And also this SOE reforms is also part of this reform agenda. So to make sure that there will be adequate competition generated in this energy sector, so that there won't be monopoly in providing the energy to the public. So when the competition is brought in, then eventually that productivity improvement in efficiency will be resolved, and those are of medium to long term nature. So currently what the focus is to manage the near term to ensure that these institutions are not giving any fiscal burden to the government, so that these targets are improving, so that the fiscal performance is improving, the program is continuing. So eventually through these SOE reforms, we can focus on these inefficiencies through competition.
Thank you. Other question that I have is on the SME sector. That is a sector which had been really maybe hit because of the COVID, and prior to that also with the Easter bomb blast and other things. I think you all have been, I think central bank has been providing a lot of reliefs on this matter. Are you all, how do you all maybe get the banks also to fall in line and maybe support the SME sector? I think you're muted. You're still muted, Dr. Sujeetha.
Sorry. The SME sectors, I think the banking sector has been providing support to the consumers for a longer term. I think starting from Easter Sunday attack, there were some sectors benefiting from this debt moratorium. And from COVID time also, there were some extensions given for repayment of debt moratorium. So now I think it's time for the banking sector stability also being taken seriously, because of this debt standstill and several developments happened in the interest rate front and exchange rate front. The bank's balance sheet also have been weakened. So maybe I think now the banks don't have the capacity to give concessions to several others or to continue these concessions. That's why this concession got ended. But we see that some negotiations are going with ADB to give some refinancing facilities, and we see some loans are happening. Even I saw an advertisement today that People's Bank is advertising SME loans for 7%. So some refinancing is happening through this World Bank and ADB projects. So that could be the banks can target those towards the needed SMEs. I think from the banking sector, from their own fund, it could be difficult for them to provide any concession, at least until these debt restructuring uncertainties and all these. Until these banks come out of this, the impacts of this crisis and the debt restructuring.
Can you explain a little about the debt restructuring and what progress is being made?
So debt restructuring, what I can tell is only what is publicly available. So the government has announced debt standstill by April 2022, and since then it has started negotiations with the key parties. So there are three key parties in our debt restructuring process: multilateral lenders, bilateral lenders, and commercial lenders. The multilateral lenders, as a principle, no country can default multilateral loans. That is because these multilaterals are functioning with member countries' funds. So if that happens, then no multilateral can lend to the economy. So if Sri Lanka has defaulted multilateral payments, then there is no possibility for central bank to access IMF loan or World Bank new loans or ADB's new loan. So it is essential for even a defaulter country to continue debt servicing the multilateral loan. So Sri Lanka also has been continuously servicing these multilateral loans. On the bilateral loans, we have two main parties. One is Paris Club countries. So this Paris Club arrangement is mainly for the low income category, and we are coming under middle income category with market access. So there is no official arrangement for this kind of debt restructuring. But with this, the recent development that the market access countries are going into this debt restructuring process, there has been a new arrangement initiated by Japan, France, and India together, that is called the Official Creditor Committee, OCC. That is supported by the Paris Club Secretariat. And under that arrangement, we had negotiation for the countries coming under OCC. And China is not a part of OCC, but China has been an observer for OCC. And due to continuous negotiation, there has been principle in agreement for restructuring of bilateral loans for OCC countries, as well as there was a separate negotiation with Chinese authorities and China's official credit also. There has been a agreement in principle that was reached in October-November period. And with that, we could get the first review completed for IMF. Then we got the money in December. Now the work had being carried out for bilateral loans to complete the MOU, the Memorandum of Understanding. And once that is completed, there will be an agreement, and that bilateral debt restructuring will complete at that stage. And also, in addition to that, we are negotiating with commercial creditors as well. We have two types of commercial creditors. One is ISP holders, and the second one is China Development Bank, that is coming as a part of commercial loan. So there has been two separate negotiations going on with China Development Bank and ISB holders. And you must have seen that there has been some announcement with ISB holders. We had restricted negotiation happened in the recent times in March, and a lot of progress were made, but we couldn't conclude come to a consensus at March, but still after that also negotiations are continuing, and we hope that there will be some consensus very soon.
Thank you. Mr. Gajendra, I think there are some questions. You can take them up, no?
Okay. Yeah, there's not a question, request whether we can get the presentations.
Of course, I have already shared with CMA, so CMA can circulate among the members. And also, the similar presentation in all 3 languages are on our website as well. You can go to the publication site, Annual Economic Review, then in all 3 languages, we have uploaded an extended presentation.
And there's another 2 questions from the same person. One is, how far is Sri Lanka in terms of reaching its output gap in terms of GDP, and by when it is expected to close?
So output gap is currently negative. So that is the reason that we are saying that the economic activities are down. So that is also the main reason why the central bank is loosening its monetary policy stance. So now that we don't have any major concerns for inflation. So under the act also, under the new act also, we have a commitment to maintain inflation at the targeted level, and also to facilitate the growth reaching its potential level. Since we don't have any major risk coming to inflation, now we are focusing on the growth side to help the growth to reach its potential. That's why this the interest rates, the policy interest rates being loosened, and that is helping the market interest rates to adjust downwards. So we expect that with this easing, there will be some pickup in credit from the banking sector for consumption and investment purposes. So that will help to bridge this output gap.
So the same person, other question was, why isn't the credit growth not picking up despite interest rates falling? I think you have answered that also.
I think credit is picking up. Credit is picking up. So from June onwards, we have seen positive credit pickup. Only in January, there was a small contraction. And we see that in February also, it reversed back. And we see some preliminary indicators for March. We see a notable pickup in credit.
And there's another question. Most banks seems to be refused to give loans to the agriculture sector. In India, the banks are supposed to lend, I think, around 25 to 30% for the agriculture sector. Would Sri Lanka benefit by having an arrangement like this, say, to cover the agriculture industry as well?
So we have 2 issues. So one is, so currently there are some efforts through these multilateral agencies, World Bank and ADB, to give some refinancing loans to SMEs. And also you must have heard that Professor Vatavala is also involved in this process to have a credit guarantee agency with the seed fund from the ADB and other financial institutions or part of it, so that this credit guarantee agency will give guarantee to the SMEs who wants to borrow to the bank, so that the SMEs can access banking credit. So why Sri Lanka can't give loans for agriculture at a lower rate? So there is no restriction for banks to give loans to agriculture. So they will be going for their credit evaluation process, and if the customer is not meeting the process, they may not be giving. But they may not be getting an attractive rate. The reason is, so we had a concept called development banks in the past, and it was working for Sri Lanka in the past. That is because Sri Lanka was a low-income country at that stage. So we had access to concessional funding facilities from multilaterals, World Bank and ADB. We were getting loans at a very concessional rate. So it was possible for us to establish development banks and give loans for SMEs and other development purposes at a lower rate. But now Sri Lanka has migrated to middle income country. So we don't have access to this concessional credit. Whatever the credit we are getting from outside the country are at commercial rates. So when the loans are obtained at a commercial rate, it will not be possible to refinance at a lower rate. So someone should be there to finance that. And the government fiscal performance is really bad. Government revenue is not even adequate to manage its own expenditure. So it may not be a feasible option in the recent times until the fiscal performance is improved to a greater magnitude. It will be very difficult for government to give any concession for this refinancing loan.
Yeah, Professor, those are the questions we have. Do you have
Yeah.
any other questions from your side, sir?
Yeah, Dr. Sujeetha, one of the areas now, as a management accounting body, one of the key areas that we are looking at is on the cost, either cost of production. Now, since even agriculture was mentioned, because the farmers, I don't think they know the real cost of production. And there are two things. One is, of course, when the harvest comes, then they have the problem that the prices are determined maybe not since they do not know the cost. Or you'll find that if the price is low, then they are saying that they are losing. Plus, also when they are importing goods, unless they know the local cost of production and they import goods at a lower price, then the farmer is going to be affected. Now, this is of course my comments that maybe that you all might be able to take something into account. So especially if they are going to import the, especially during the harvest time or shortage time, that they should look at this cost of production for the for the farmers. Otherwise, you bring the imported products at a lower price, and then the farmers will lose, or they may not be able to pay the banks. Now, that's the problem that will happen, that they will not be able to repay the loans. I don't know whether you all have given any thought to this sort of thing, or whether you might be able to maybe take up this matter when discussions take place.
Yeah, so one thing is these are beyond our mandate, sir. So this is the policy of the government. I don't think that we have any direct role on this.
But from the banking sector, don't you think that you see banks are faced with a few problems, because now since you all are controlling all the banks, first thing is that a lot of the people are not maintaining records or books of accounts. Then the some of them are not even maintaining records. Now when they calculate the cost of a service, the records are not maintained. So I don't know whether maybe as far as the banks are concerned, if they're giving a loan, they can insist that these customers should maintain books of accounts. Otherwise, the bank will have a problem.
I don't know how this credit guarantee institution is going to be institutionalized. I don't know whether when someone is going for guarantee, these can be imposed as conditions to become eligible for credit guarantee. Then maybe the credit guarantee institution can insist that there should be proper records, so that that will facilitate the banks who are willing to lend to this customer. So maybe through those kind of arrangements, this can be institutionalized.
Yeah. I think there is another question, but I don't know whether some of our CEO, Mr. Kosala, you have any questions? Any of the others who are here on the panel?
Yeah, well, thank you very much for your excellent presentation. I just want to find out, you said that, our interest has come down from maybe about 20 odd or whatever it is to 9% or whatever it is. And then you said the credit is now picking up and all that thing. That's also fine, but of course, very slow process. But why people are not invested? If the credit is available, why people are not invested? Because there's no demand from the people that, that is why people are not investing and then get into the business. Is that the way?
In a way, it's true, sir, because even though we are reducing the interest rate through monetary policy easing, the fiscal conditions are still tight with this high tax, and all people's spending capacity is much lower now. So because of that, the overall demand condition has come down.
Yeah. No, actually, the all people are politicians. Everybody is talking about that. the income levels have gone down and people can't survive and that kind of thing. So the spending is very low. So is there anything that the central bank as a government or taking some action to sort of increase their earnings and all that?
I don't think central bank can do anything on that.
Yeah.
So central bank can do only through these monetary policy measures. That is what central bank is trying to do now. So reducing the interest rate so that is helping the consumers who wants to borrow for consumption purposes, and also the firms to borrow for investment purposes to have a low cost credit. So from the central bank side, that is the only possible tool that we have, and we are currently doing that. I think from the government side, I think still government doesn't have space to provide any additional concession to the people, because still the revenue levels, government's revenue levels are not to the level, the average levels that is observed in many other countries. 11% of GDP is still quite low compared to the debt servicing requirements and other expenditures. So I don't think at present government also has that pace. So maybe so there are, from the investment side, there are also some uncertainties. Still, I think, as I mentioned in the presentation also, the country has not come out of the crisis yet. Maybe from the investors' point of view, they may be waiting until they see a very clear sign. And the current year is the election year. So maybe from investors' point of view, they may be waiting to see some stability on the political front as well, to see whether there is going to be any political changes that is affecting the policy changes and all. So maybe from the investors' point of view, they could be adapting a wait and see approach.
Right. Thank you. Thank you, Doctor.
Dr. Sujeetha, one matter now, of course, interest rates coming down is good for the business sector. But there is also maybe like senior citizens who are really dependent on the interest which is their main income. Now it's almost half from what they were getting earlier. Would there be any sort of maybe where at one time, of course, they gave a certain concession to the senior citizens where there was a high interest rate. Would they be looking at something like that, or it might be not possible?
I don't know, sir, but if there is something like that, then that should be coming from the government budget. So earlier what has happened is, if the bank interest rate is 8%, then the senior citizens were given 15% for a deposit up to 1.5 million. So the government has been paying this additional 7% as a concession. But what has happened is, so because of this constraint in fiscal performance, the government was not settling these arrears to the banking sector. So there has been huge arrears being built up in the banking sector. So at certain point, the banks were also reluctant to continue this without adequate repayment by the government. So that was one reason why this was stopped. I don't know currently whether government is having any alternative plans to serve this. Maybe from the private sector also there can be some new financial products can be initiated, so that rather than the senior citizens relying completely on bank deposits for investment, there can be some alternative investment that is giving some competitive returns.
Thank you. One fear the people are having is that now currently really the bank, due to the debt restructuring not being finalized, we do not have to pay maybe the interest, I suppose, is not paid, and the loan installments. So the fear that people are having is once we finalize the debt restructuring and start repaying, how do you think that we can meet the additional commitments that will come in?
So I think this is I think this you have. I think it's good that you asked this question. I see that a lot of people have this question. I think for me, this is partly misconception. So, but I already explained that part of the debt even now being repaid. So as I told you, the loans with multilaterals, IMF, World Bank, and ADB, other project loans are still being serviced by the government. And Central Bank also had some liabilities with the swap facilities with other central banks and Asian Clearance Union arrears. And now currently Central Bank is also paying those arrears. So this current buildup of reserves is after settling all of these. So what is going to come new after this debt restructuring is the repayment for bilateral loans and the commercial loans. And the purpose of debt restructuring is to ensure that giving some concession to the government for the debt servicing as well. So there is going to be a reduction in debt servicing on an annual basis as well. That will be around 13.5% of GDP. So even after this debt restructuring, we are not going to pay back the entire amount at the same rate that we have initially agreed. So that is the conditions of debt restructuring. Either for some loans, we may be getting some grace period to start the repayments, or we will get some space until we come back to normal. And for some loans, there can be a reduction in interest rate. So our total debt servicing per year may not be as high as we have been experiencing in the past. So we experienced in the last few years, the debt servicing requirements have been in the range of 5 to 6 billion. But going forward, after debt restructuring, we don't expect the debt servicing to be as high as 5 to 6 billion. It will be quite lower. That's the purpose of the overall purpose of debt restructuring. So the size of the debt will also be coming down, and the debt servicing requirement will also come down. So by that time, with this revival in tourism, continuation of workers' remittances, and maybe the services sector export, other services sector export, and revival of exports, we could be also generating some forex, and we could be able to manage.
Now,
Based
one
on
of
the
the points
yesterday's-
you have mentioned, one of the points is that I think in 2024, the electricity energy prices, are you all expecting that it will go up further, or will it?
It depends on the cost estimates. So currently, it's going to be on a quarterly cycle, this electricity generation. The prices tariff are going to be revised. So last time we got a huge reduction in March. That is because extraordinary rainfall level that was observed in the last the quarter of 2023. But we can't expect the similar rainfall in the period ahead. So in case we are currently experiencing dry months, so in case if we don't get enough rain and if our reservoir levels are not filled, we may have to switch to costly generation options. So that could increase the cost. It all depends on the estimates. So one factor is exchange rate. So from the exchange rate side, we have some favorable development. Exchange rate is appreciating. So, and it depends on the switch in generation options. If you are going towards more costly options, then the current tariffs may not be adequate to cover the full cost.
Can you also explain, now that you mentioned about the exchange rate strengthening, what sort of measures that have been taken and what we should maintain in order that this exchange rate could be stabilized?
This also I want to highlight that so there is also a misconception about this exchange rate movements. So as I told that under the new Central Bank Act, the exchange rate policy is going to be flexible exchange rate policy. It's mostly market driven, demand and supply conditions. So currently what's happening is we are getting more remittances, we are getting tourism earnings, and also the exports also, even though the export performance has been lower than the normal years, we see that exports have been higher than 1 billion in the last 3-4 months. So the export conversion is also happening. There is a requirement for the exporters to convert the residuals. So all these inflows are helping to create the supply of forex. At the same time, the demand for imports are quite low. So because of that, there is some excess liquidity of dollar available in the market. So that is the main reason why this dollar is appreciating. The central bank is not targeting any level of exchange rate. What central bank is doing is central bank is buying mainly from the market to build reserves. So far, by end of March, central bank has bought around 1.5 billion from the market itself. So that is from this excess liquidity available in the market. And central bank intervenes in the market only when it observes very excessive volatility, either on the depreciation side or on the appreciation side, just to smoothen excess volatility on a daily basis. Other than that, central bank is not intervening in the market to fix any exchange rate. So all depends on the market development, supply and demand conditions going forward.
Thank you. Rajendra, are you having any more questions? Or I see that there are one or two. I don't know whether they are.
Yeah, there's a one question, Madam. In 2023, what percentage of GDP have we paid?
You mean debt servicing?
Must be based on the question. I think they're asking what's percentage of GDP we paid as a debt servicing.
Debt service, the debt service as a percentage of GDP, it's in the slide also, around 15 point, let me check, 15.4%. And that is mainly because of increase in domestic debt servicing. Because of high domestic interest rate, that increased.
Rajendra, it's
So
connected with the balance part he has given below, You mentioned, salary that you mentioned 13.5% of GDP. Does that mean our debt has come below 100% of GDP now, since it was around 110% of GDP? I stand corrected if my statistics are wrong.
The debt level, in the presentation also, I have shown that 114.2% central government debt to currently almost 104% of GDP. But these targets are slightly different from the debt targets that's being discussed for the debt restructuring process. This is central government debt. In the debt restructuring process, even the guaranteed loans and all are being considered. So for the restructuring purposes, the level of the debt considered for debt restructuring by the end of 2022 was 128% of GDP. So what we are showing here is 114 only. So there are some additions. There are some additions for the debt restructuring debt target, because all these guaranteed debt are also being considered for this debt restructuring process. And if you visit this publication, you will see that we have given footnotes to explain these numbers. What is included, what is not included.
Now, when you say 128%, that includes the local and foreign debt. Is that correct? Or
yes, total debt. Yes.
total.
And we are expecting a release of 17 billion. The reduction in 17 billion debt.
Reduction.
And there's another question: is the central bank is having positive cash to intervene and buy dollars, or is it with the printed money?
The central bank is a unique institution. Central bank actions are through the So central bank is when central bank is doing any transaction, that is through the printed money. But it doesn't mean that whenever we are buying dollar, the entire amount is going to the economy, because we closely observe the level of money in the economy through our market operations. Because we have this monetary implementation part, monetary policy implementation part. So we closely monitor the availability of money in the economy. We simply say that market liquidity conditions in rupee. And if we think that there is too much money for this purpose, we call the surplus in the liquidity, and there can be deficit in the liquidity. So currently what happens is, when we are buying dollar, we are paying rupee outside. So that is improving the liquidity condition. So currently we don't have any serious problem of excessive liquidity. The current excess liquidity is at a manageable level. And if we feel like the liquidity level is high, we will be doing market operations, open market operations to limit the availability of liquidity by selling maybe on auction, through auctions, long-term, short-term auctions, repo auctions, we can absorb liquidity to ensure that there is not too much liquidity is available in the market. So that is affecting inflation, because we are in inflation targeting country. More than anyone, central bank is too much concerned about the inflation developments. And if you think that the level of money available in the market is disturbing the future inflation, we'll be acting through the market operations.
Yeah, Professor, now we are coming to the end of the time. Will you do the concluding remarks? Or?
Yeah, let me, I think Mr. Kosala, you'll be ready for vote of thanks, but I'll just speak a few words before we conclude. So let me thank Dr. Sujeetha Jegajeevan, because I know that she was very busy, actually she's been running, and also she's been conducting a lot of maybe presentations on the annual report, annual economic review 2023. And so we are very thankful to you for sparing your valuable time. I know you were at a meeting and you came out early to conduct this webinar. So we are very thankful to you. And we've been doing this annually, actually. This has been an annual feature that we've been getting the director of the central bank to come and then make the presentation. I think a lot of the matters you have mentioned was very useful to all our members and others who are present, because we are mainly concerned maybe on the not on the economy, but maybe on the income, expenditure, and of course the profit and loss figures that we are looking at. So these are I think was very valuable exercise for us. And we are also proud that you are a member of CMA, and certainly that you will give us all the support. You will also give us all the support. We have one of your members on our, Ms. Sureka is there, Sureka Katavala, she is there on our council, and that's by act of parliament that member from the nominated by the governor of the central bank should be there. So once again, let me thank you, but I will now invite our CEO, Mr. Kosala Dissanayake, to give the vote of thanks, Kosala. I think you have to unmute, Kosala. Can you unmute?
Yeah, no, it's okay. Yes.
All right. Okay.
Yes. Actually, thank you very much, Doctor, that you have done an excellent presentation. I think we have been sort of hearing here and there that what's happening to the economy, but of course you are given a very clear explanation that what has happened and what is going to happen that in the future also. So it's a really good eye opener, and people will understand that the efforts that you all are putting to get the economy right. So that's a really good effort that you are going to put in. So thank you very much for everything, and it's really to hear from you that you are a member of our institute also. So it's that really we are happy that one of our members that having that type of position and doing good work for the country. Then Gajendra, thank you very much for sort of coordinating this seminar, and you have done an excellent job on that. And also Shanti, connecting all these people and get the work done for our seminar. Finally, Professor, thank you very much for organizing this type of seminars. It's a really good for us, that for our members also, that to get the knowledge and what's happening in the country. I'm sure that our members will appreciate that the good work and hard work you are doing tirelessly. You are doing this continuously. That people I know that they're talking about that the what you are doing for the institute and also the country. So thank you very much for all the efforts. Thank you.
Thank you very much. Thank you for the invitation, and it's an honor.
Thank you, Dr. Sujeetha. I'm sure we keep in touch, and then
Sure.
we might be invite you for in the future also, and I'm sure that you'll be able to give good knowledge to our members and make them more active, and also to know the correct position. I think that's the most important thing, and the hard work that you all have put in. So we really appreciate within a short period of time that we've been able to come to this position and to make not only the economy but the country also stable. Thank you and all the very
Thank you.
best.
Thank you.
Thank you, sir.
Thanks, Rajendra. Okay. We'll finish off.